just had a chat with Zaki a little bit about New York, where he now resides. And today agenda, I guess, is mainly about sommelier. Um, and by the way, you guys, if you appear, just let us know if the audio is okay.
Yeah.
Um, so Zaki is co-founder of Sommelier, which is Cosmos blockchain. And I would say, is Sommelier, would you say Sommelier is your flagship project right now, the project
Yeah,
you are mainly
absolutely.
focused?
Yeah, it's my
Because
main focus.
yeah, because many people like associate you with everything, right? Because you are a contributor to quite a few chains. You are a developer yourself. You run Inclusion, which is also, I believe, investor, right? Inclusion is
Sure.
also venture capital, but not many people maybe knows that Sommelier is actually
My main
uh,
project.
your main project. So maybe not many people knows about it. If you can break it down, how Sommelier come to existence,
Yeah.
what is it, and yeah,
Um,
yeah,
yeah. Okay. So sorry, hold on.
that's all right.
Done. Do not disturb. Cool.
I have the issue, my wife hates me because I have not disturbed 24 hours. No one can calls me because when they call, it declines the call right away.
Yeah.
So my wife would DM me on Twitter to call her sometimes when I don't pick up. Yeah. So
I don't think your wife hates you, but yeah. Notification management, never
yeah,
ending struggle.
she
Okay, so what
she's
is let's dive in on what is sommelier. Um, so sommelier. Okay, so the question is, what is the problem that sommelier is solving? And the problem that sommelier is solving is there are lots of opportunities to earn yield, profit on in DeFi today, basically since DeFi summer 2020. But the reality of the situation is that most people do not have the time, the monitoring, the infrastructure, the skill sets uh, to take advantage of those opportunities. Okay, it's just crypto markets are still very inefficient. Um, it's and so when we started with Sommelier, we were like that was the hypothesis. The hypothesis was there are plentiful opportunities for earning better returns in crypto that people don't have access to. So then the question is, how do you create a set of infrastructure, a set of tools that would actually allow for realizing those opportunities? And that took a lot of time and money and energy to build all of those tools. But all of that since the beginning of the year has been up and running, right? We built. Um, so like, what are the pieces and components of this system? So one is we have these vaults on Ethereum that we call sellers. Um, and these vaults are unique and are like somewhat unique in their ability to take any position in DeFi. So like borrow, lend, trade, interact with multiple various DeFi protocols. Just huge amount of opportunity. Um, and so we have these vaults, the seller vaults. And so this is generation 2 of sellers that has come out now. Sellers V2. Um, and so sellers V2, it exists. These are what have enabled real yield ETH and real yield USD, and like dozens of new strategies that are coming down the pipeline. The um, so that's one piece of the technology. But then what people need in order for this to work is really they need active management. Okay, you need to have strategies that can take in data from centralized exchanges, like you know, Web2 sites like CoinGecko, uh, process all of that data and make decisions about how to optimize execution of a strategy, when to trade, etc. Those opportunities are those opportunities are the result of so like that needs off-chain computation infrastructure, and we need to have a mechanism by which those off-chain computations can safely be interfaced with the smart contract so that the user doesn't have to trust the smart contract. And that's what the Cosmos chain does. The Cosmos chain takes those signals. Just give me one
Mhm.
second.
No worries.
um uh the Cosmos chain takes those signals and processes them, checks whether or not they're going to be safe to apply to the smart contracts, and then executes them. Does that make sense?
Yeah, so that was the unclear that was the unclear part, because I was chatting to you, and we distinguished that Sommelier is, for its values, is the application being built on Ethereum. It doesn't really differ much than Yearn Finance, right? Aave and other applications there. But the blockchain is secondary to this, that dictates the different strategies, right?
Yep.
That are um like, is it the most efficient way to create the strategies this way? Because I was like, what why the set of the why the governance? Because whole process is automated. Doesn't governance make it less efficient?
So I think the real question is whether or not you can do something like this safely and in a scalable way.
Hmm.
Like there is a market even today for hundreds or thousands of these strategies. Like there's just such an enormous uh number of potentially profitable strategies that are out there. And this is like when DeFi is basically in its
Hmm.
infancy, right? It is so much less than what it could be in the future.
Hmm.
So how do you not just create like the same old fund management, digital asset management structures that exist, where like you give your money to a fund manager, he goes out, you know, you trust him not to lose your money, you trust him not to steal your money, and you hope that they will do the right thing.
Well,
Uh,
it's even more, because the fund managers, well, you rely on the human error, right? Like, you rely on something that this let's say that this fund manager thinks is good idea to short Hong
well,
Kong dollar, and then, like, it's not most efficient process, right? Like,
if you are investing in a quant fund, it's the same thing. Like they're using software, they're using algorithms, etc.
so
Um,
the values is automated, right? It's the
Yeah, they
software.
are automated, but they're, the software that's running on them is continuously evolving. There is discretion essentially in multiple layers of the system.
Yeah.
Um, so because like you also need to be able to take it to account like black swan events, like the USDC DPEG, for instance.
Yeah. um yeah,
So
I want to.
okay, let me. So you asked a very simple question. It was like, is this the most efficient way of doing this? And the answer is no. It's not the most efficient way of doing this, but it's the way that is safe and scalable to do this. I.e., it is the way to do this that would support hundreds of strategists, thousands of strategies, without users running the risk of, without like excessive risk of, you know, uh, funds getting stuck, funds getting lost, unrecoverable states.
Yeah. Would the process be more efficient if that would be like fully centralized company and
Oh,
could.
absolutely. But that would just be a hedge fund.
So don't you think that there is the risk, like, there is a lot of companies seeking opportunities, and
Sure.
a lot of other large companies don't really trust blockchain. They want to have that human factor. Do you think there will be a competition that will come to you from the centralized entities,
Well,
that there
we've
will?
seen the centralized version of Sommelier for this entire cycle. The centralized version of Sommelier is Celsius. The centralized version of Sommelier is Voyager. Like all of these things blew up, right? And
Okay.
we wanted to build like all of these things rubbed. Um,
Well, the
and the
thing with them, they were not doing actually what they were supposed, what they
Yeah, but
supposed to.
like
They would
if you
take the
don't
funds and just
build a
leverage and stuff,
yeah,
right?
if you don't build a decentralized system, like how do you know? Like you really don't know
Hmm.
the if the centralized entity
Yeah,
is doing what they said they were.
yeah.
Sommelier, like you can go on DBank, you can go on Etherscan, you can look at the contracts, you can see what assets they hold, you can see what positions they are doing, you can see that it's actually doing what it says it does.
Yeah, like I want to get a little bit back because many people ask about sommelier and tokenomics, and then we actually gonna get also to because like what's really interesting about sommelier, I think we in Cosmos don't really have Ethereum users. Like we are very unique in this part because when you obviously many layer two users actually come from Ethereum, while a lot of Cosmos users, when I talk to them, they never used Ethereum. And what I like about Ethereum, its size, because of the size of the Ethereum, right? It's large network, $200 billion value. The larger that is, it's actually more promising, and it gives more opportunities to protocol like Sommelier, and it also generates the real yield, right? The Ethereum doesn't have that much of the inflationary tokenomics. There is not like additional issuance. It's heavily related to the use. So people here are able to earn the yield, real yield, instead of just pure inflation that we have in Cosmos, inflation or token issuance, right? So.
So what I would say is Ethereum is like useful to so like ultimately like blockchains are settlement systems, like they're economic settlement engines, like they're used by which different counterparties can exchange assets, risks, liabilities, and settle those transactions in a common knowledge system, right? That's what a blockchain is.
Mhm.
And Ethereum is the most useful blockchain to the largest number of counterparties, which
Mhm.
who represent the largest amount of economic value. Like that's the state. That's like the truth of this of the world, which is there are way more counterparties. There are way more funds and asset managers and individual people and whales and end users
Mhm.
who who are able to interact with Ethereum, who have risk and operations and compliance and tax and everything figured out for Ethereum than for any other network,
Mhm.
right? And that is where that is where the utility of Ethereum is.
Mhm.
When you think about building Cosmos, it's about growing Cosmos in that way, right?
Yeah.
Growing the network and its ability and like its utility to to a wide range of
Mhm.
parties.
Mhm.
But Ethereum has that today. Ethereum, the pools, the ways in which uh, 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 Sommelier is generating yield in these strategies using, the way the seven C's and Define Logic Labs and the other strategies are. These are sources of yield that are basically driven not by, token incentives to, you know, join the network or here's this new yield farming scheme or anything like that. It's really saying, hey, this is why we use the real yield branding, right? Which is like people have various reasons why they want to swap on UniV3, USDC, USDT. And we just, the strategy allows us to generate yield from that. And no one else is generating yield from that. No one else
Yeah.
has the technical wizardry to do that.
Yeah.
And the same terms of Ethereum's transition to proof of stake, transitioning the base asset of this like, $200 billion system to proof of stake, it's created a lot of arbitrage opportunities, basically.
Mhm.
And real yield ETH is just there gobbling them up.
Yeah. Um. Okay. One thing, because that's, I think this one is really before we get into the founders. Look, Sommelier, there is a lot of large funds. A lot of these large funds actually have large assets of Ethereum, right?
Yep.
Um, one of the investor of the Sommelier was actually Polychain. I
Yep.
can't imagine them not holding large amounts of Ethereum.
Yep.
The the other best opportunities, they could liquid stake it and year earn 5.5 maybe APY or something. Um,
Yep.
it seems like Sommelier is directed to those people because it makes sense if they hold $100 million worth of Ethereum. Hey, you going to yield, like you're not going to do anything with that. You might stake it for like 5% or something, but
Yeah.
here is how you're gonna make additional 5 million or 10 million or
Yep.
20 million, whatever. Like the larger you are, the more promising Sommelier is.
Yep.
So I have the question, if Sommelier is in contact with these large institutions, like I know you might not be able to disclose that, but it seems like perfect customer, right? And I would imagine actually Polychain, because total value locked is still small, I would imagine Polychain is not doing this. So there's probably concerns of them because that's also a lot of money, right?
Yep.
But is Sommelier trying to get those customers? Are
Yep.
they aware? Are they considering?
Yep. That's what it's like, you know, it's a hand-to-hand combat. Um, you know, it's we talk to funds, family offices, DAOs, um, you know, all of whom hold large amounts of ETH. Um, you know, getting it is the so like one thing that is like sort of again people don't really understand about the way crypto works is so like probably like in much of the market the biggest chunk is just people buy crypto assets and they hold them on exchanges,
Mhm.
right? That's like probably the biggest thing. Then there's like people buy crypto assets and they hold them at qualified custodians, Anchorage, BitGo, etc. Then there's like of those that world, a much smaller world is the
Mhm.
world of people who are deploying their assets on chain.
Mhm.
Um, family offices, uh, family offices, funds, etc., who do substantial on-chain deployment. Um, then you have to be sort of set up for doing that.
Yeah.
And we have lots of teams. We talked a lot. Between like Define Logic Labs, we have like large followings, right? And so we're constantly talking to all of the people that we know, get it, continuously sort of uh, uh, making them aware of how products like Real Yield ETH and Real Yield USD are doing, what the opportunity is there, and trying to onboard them and scale the TVL. And to a certain extent, it's like there's a positive feedback loop, right? Like people see TVL going up, they say other people are more comfortable with it. It makes them feel more comfortable with the safety and security of the
Yeah.
product.
Because to me it seems like one of the best opportunity. Like I was always thinking the Circle and Tether, they have like the perfect business model because just earn yield on the bank deposit in like short-term treasuries and stuff like this. But here is like substantially higher yield for those larger institutions. And like if so, let's say I would be this large Ethereum holder. Let's say I have $500 million worth of Ethereum. What is the worst that could happen? That staking Ethereum. Is there anything worse that could happen if I choose not to do this and would deploy this large capital to Somalia? What the worst that could happen?
I mean, the worst that could happen is, I mean, there's smart contract risk in Sommelier, right? Like there is risk of failure in the smart contract system. If somebody showed up with $500 million of ETH tomorrow, that would be stressful. Uh, um, I think we have gone through a very extensive audit process. We've had a number of white hat people. I think we're launching. I think the bug bounty launches tomorrow. But we've informally been paying out bug bounties on white hats who've
Hmm.
looked at our contracts. So on one hand, I'm like, it's not like it's not like obviously unsafe. I think that we could scale the system quite a bit. Um, but there is you know over time it is valuable to slowly ramp to like have these things ramp up over time, and everyone in the market build more and more confidence that these yield opportunities. But on the other hand, it's like I do think if we had 10x the TPL, I think it would be a perfectly reasonable and state of play.
Yeah. Is the risk similar to like Lido? Because Lido is also right the it could get exploited, or the Lido is
Oh
not.
no, yeah, yeah. All of the liquid staking protocols, um, you know, all of the liquid stake. Like I mean, there's like layers and layers of risk, right?
Hmm.
Like um, we with Sommelier really try to focus on integrating like sort of blue chip protocols only. So
Hmm.
like right now we support in this contract like real yield ETH. We do staked ETH, Rocket Pool ETH, Coinbase ETH. Like
Hmm.
those are the primary targets. I think we potentially add Frax into it because we do a lot of risk assessment and we support Aave and Compound and Uniswap, right?
Hmm.
Uh, I mean, the reality is if like I mean, like the reality of the situation is that like if there's a major Aave exploit or a major compound exploit or a major Uni V3 exploit, probably DeFi doesn't exist anymore. So if you're in DeFi, you're probably inheriting these risks
Yeah.
inherently. And like Rocket Pool ETH and Lido are also, sort of almost at the size where they're too big to fail. They're systemic risk.
Hmm. Yeah. So it's not that people like not use protocols that are risky, like they already use it. So surely they have no reason to not use Sommelier. Um, I would say, there is a lot of people using Aave. Like there is billions of dollars in total value locked, I think. Um, by the way, Austin, I will ask that question very soon. But like, I'm quite confident that if you would have the token on it, like if Sommelier would launch slightly earlier, maybe because the timing is also, I think Aave and others benefited from the DeFi summer.
Yep.
But I feel the reason that Sommelier is on Cosmos affects the size of it,
Yeah.
because you have these other protocols and like $1 billion total value locked on Ethereum is quite easy to see around, but
That's
Sommelier
right.
is
I will
right.
I will not say that that's entirely true.
Hmm.
Um like Sommelier is in both real yield ETH and real yield USD would be in the top 10 uh urn vaults, for instance.
Hmm.
Um like the so and the we the strategies benefit from the strategy enormously benefit. Now the fact that like we sort of don't have sort of price discovery of the Som asset
Hmm.
on Ethereum, I think is a problem, is a challenge. We recently launched on Camelot Dex in the Arbitrum
Hmm.
ecosystem. Um, so we are trying to expand price discovery and liquidity for the asset more into the Ethereum ecosystem. We definitely had a lot of there was a lot of stuff that needed to get sorted out to get things to the point where we had effective price discovery and liquidity on ETH. The bridging, like the native bridge, really only supported one-way bridging from Ethereum to Cosmos for a long time. Recently, now it supports two-way bridging. Yeah, I mean, on it, like practical answer is like Timing has been a challenge. I just like didn't expect FTX to be a rug. It was like the the
No,
like simplest
yeah.
answer in terms of like how I thought about structuring, timing, launch, all of this stuff. But then also, the sellers V2, um, the smart contract design took a long time. It almost took a year for us to really know what we wanted from a smart contract design point of view, and then almost another year to like develop the smart contracts, get them audited, get them launched.
Hmm. You mentioned Camelot. These are interesting because these are Arbitrum guys. They actually messaged me. They told me like 2 weeks ago they gonna call up with Sommelier too, and they messaged me
Yeah.
about Stride.
Yep.
I think they're like very well aware of Cosmos because they knew like I'm from Cosmos, so they messaged me about
Yeah.
Stride, and they try to bring Cosmos assets like ST Atom to Camelot and now Sommelier, right? Like so.
Yeah. It's sort of interesting though. Like right now, LPing LPing Som ETH on Camelot is actually the highest yielding LP opportunity. There's Som incentives, there's Grail incentives on Camelot, but like I don't know why, but like it is a little bit of a mystery to me why fewer people from that ecosystem still have been enthusiastic about and excited about interfacing with Som.
Yeah, because like they messaged me. It was first time I heard about the Camelot, and they mentioned this. I'm trying to see the pools, but I imagine it's very high yield because the liquidity still should be small. It's not. No, it's bearable. It's 125K
Yeah.
TVL, and the incentives is it's very crazy. It's from 99% to 420%.
Yeah.
So, well, if it goes to 500,000, that would be around 100%.
Yeah.
Still promising, right? So, if anyone wants to
I mean,
provide
if it
me,
was a 500,000, it would be bigger than the osmosis pool, I think.
yeah, like I would have to check. I don't know what's the osmosis liquidity. Is there still incentives on osmosis or not really?
Yeah, there's still incentives on osmosis.
Right.
Uh, there we have superfluid staking also on the pool now. Um, so
So
there,
yeah, those who don't know, Camelot, I think is the largest on Arbitrum. Yeah, is it the
yeah,
largest dex
I
or
think
like?
it's the largest DEX.
Yeah, it's 89 million total value locked.
Yeah,
Um, and Sommelier is there. So if anyone wants to do it, you just like bridge Ethereum
yeah.
to Arbitrum,
You
and
take your ETH. You take ETH. You take SOM. You could bridge to the to you bridge to the to Arbitrum via SOM via Axelar, and that's how you do it.
or just like Arbitrum bridges, and you can do Ethereum and swap into some. The liquidity is okay unless you deal with very large sums. So then
Yep.
you have to bring some. But if it's like $500 or whatever, like it's not gonna move the price that much. So I think it's okay. On these strategies, right? I imagine Sommelier Foundation or whoever manages that, they take the cut of the
Yeah.
whole revenues, right?
So the foundation doesn't run any strategies. Um, um, the 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 what the so we have so all of the strategies are run by third parties. So Seven Seas, Define Logic Labs, Patosh Digital, Cleargate Capital are the providers of strategies on some
So who gets the cut? Who gets the
those teams.
uh,
Um,
do you know how much is that? Is it like
yeah, so if you go
10%?
to if you go to any SOM strategy detail page,
Mhm.
so um,
In the strategies, or because I was,
so I'll just show you.
yeah.
I'll send it to you on Telegram.
because I was using some page a little bit, but I couldn't find the cards.
Yeah, I'll show
From
you. If you go
okay.
to the detail page for any SOM strategy and you scroll down into the strategy details, it shows you the cuts.
Oh yeah. Um. Yeah.
So
5%. Yeah. So okay.
5%.
80%. Yeah. So for example, the real yield Ethereum, which is like most interesting for me. You get if you
I would
deposit,
call it the most interesting strategy on SOM right now.
yeah, 80% goes to you as the depositor, which is the information that you like. The APY that you show is APY for depositor, right? On the you show.
Yep, it's net of fees.
So okay, and 5% is the some protocol, and 15% strategy provider. Do you think the fee of strategy providers is going to decline in the future?
Um, I think, we're still trying to figure out what the right number is for the strategy provider fees. Like 15% is pretty typical. The 2 and 20 model is a common model in asset management in general. Um,
Mhm.
but the um, the the um, this is like, so we're just basing it off of, sort of approximating the 2 and 20 model, for real yield USD. But like basically I think, a lot of the modeling that goes in is like, we do like the strategy teams do analysis, and it's like, okay, net of fees, can we provide the best yield out there?
Mhm.
And that's always been like the target, right? Like,
But it's
net of fees.
interesting on US. You just like on stable coins is providers don't get anything. It's hundred
Uh,
percent depositors.
we changed it recently to be only a performance fee.
Yeah, there's
Correct.
performance fee 0.5.
Yeah.
Yeah, which is very low.
Yeah. So we really reduced the fees there. Um, there's a DAO that we're talking to about allocating, and one of their conditions was no management fee. So we removed the management
Yeah.
fee.
So this the protocol fee, it's going to you guys who run company, right? That's your profits.
There is no company. Um,
Where does it go?
oh, the
It's the
protocol fee
DAO.
goes to the stakers.
So you already share the revenues with the stakers
Yep.
in the form of some tokens or
In the
in
form of
other.
SOM tokens. So
So do you get these revenues and do the token buybacks and
yeah. So
distribute?
what happens is the fees are bridged over into onto the SOM chain, and then there's an auction for SOM tokens
Mhm.
periodically, and then the SOM tokens that are bought back from those auctions are paid out to stakers.
Do you buy them regularly, or it's okay to predict, because if this liquidity is so low that I imagine it might affect the
Yeah,
price.
but the fees are also small, right? So it's
Yeah,
not a huge deal right
yeah.
now.
Do you plan it to be always the same way, that it will be in the form of some tokens, or you are looking into different strategies to share in the other tokens?
The advantage of doing it in SOM tokens is like you have like a common asset to account for. So right now, because fees are still ramping up and TVL is still ramping up,
Hmm.
we've been thinking about there's a grant from the community pool that is driving the SOM rewards right now,
Hmm.
the staking rewards for SOM. So there's about 10% APY. Um, I don't know. I think like one of the things that is one of the biggest challenges, right, with the SOM token is frankly that so it is a Cosmos token, like
Hmm.
it is a Cosmos staking governance token, which you know is a little bit of a leap from people who are only used to from the Ethereum side of the business, and for the Cosmos folks on the side of the business, they're like, we don't really understand the concept of a non-inflationary token
Yeah.
that doesn't just like print infinite money and has like an actual strategy to try to get to real revenue within like a couple of years, right?
Yeah. I was worried because you have users on Ethereum sides, but stakers are on Cosmos sides, and like
Yeah,
so I was
honestly, it's a challenge.
yeah.
You know, it is a challenge, and if there, it is definitely a thing that like I believe holds some back a little bit, but
Hmm.
like these are the choices that we've made, and it's really this technology stack that allows us to do this like very unique
Hmm.
thing.
Yeah.
Um, um, but yeah, I mean, on the other hand, it's like Kepler is very easy to use. Um, uh, and like part of the intention here is to like introduce more Ethereum users to Cosmos. And so that's also been a big part of the story here. But yeah, no doubt, it's a thing, it's a challenge.
Yeah. Um that might be difficult, but do you have in mind maybe how high of the real yield would be for some stakers? Let's place it like real yield 10%.
Yeah, so
How what would have to be the ratio of TVL to the
we need
just
about 3 to 500 million TVL to generate 10% APY.
at
Um,
the current
yeah,
price?
no, that's actually at a higher price, I believe. That's almost a dollar. Um,
Right. Yeah. So that would be okay. So you need like double TVL to maybe some value
no,
or
no, we need about 20x the TVL, or
oh,
like no, double the TV. You're right, like about double TVL at current value to sort of start approaching break even. But like our goal would be to like 20x the TVL, and that would get us to like a really nice sustainable place.
yeah. So let's say if the sum would be $1, now you have the around 200 million tokens. So you aim
Yeah,
4 billion total value locked, and then would be. Do you know what yield would be at this?
I have like there are a bunch of charts and graphs and stuff like that. I don't
Yeah.
have this all in my head.
Yeah, I know those are difficult, but like I was thinking, oh, what would be the revenue share?
Yeah.
Because obviously this is more
Uh,
competitive product
yeah,
than
yeah.
liquid
I mean,
staking,
like
so the margins are less.
generally in like reasonable market conditions, you should expect um, Sommelier to be generating the platform to be taking home about 5% of TVL in a
Mhm.
year in revenue. Um,
Yeah.
so if we had $300 million, that would be uh,
Current market cap is around 20.
like 15 million. That would be about 15 million in revenue.
Yes.
So
So at the current price, that would be like 75% yield, which
yeah,
would obviously push up the price, and it wouldn't be. So like that I understand this very well now.
yeah,
So with that, the tokenomics, I think the tokenomics were not very clear because I tried to Google them, and it's very difficult to see the split of tokenomics.
yeah,
Like,
yeah. We have a Notion page of the tokenomics that we share typically. I'll send it to you.
so
And the tokenomics are relatively simple. There was an initial, there was an initial distribution. So 500 million tokens.
yeah.
That's it.
Hmm.
There's just 500 million tokens. There are um, there was an initial distribution of 10% of the token supply to a set of founders. Um, the like
So
biggest
sorry, how many to set of founders?
10%, 50 million tokens.
To
Okay.
and you have like I saw three founders, but there was more before, right? So was it?
Yeah, I mean, there are a bunch of people in that
Yeah.
like founder chunk,
Hmm.
right, of the supply. Um, uh, Althea gets a lot of attention because they have been selling a few tokens here and there into the Osmo
Yeah,
into the
I want to say because you have these drops, but like I bought a few $1,000s worth of tokens, and it moved the price 4%. So
Yeah.
it doesn't take really big sell. Like you sell 10,000 and it moved the price over 5% because of lack of liquidity, right? So
Yeah. The token is very illiquid for
yeah.
reasons that, like I said, kind of mysterious. Like, there's like a 50% APY on Osmo
Mhm.
right now on the token, like just in Osmo rewards, in addition to the Som rewards that are on the pool. There's like 400% APY on Camelot decks. I don't know. It's a little bit of a mystery as to why there has been less enthusiasm to LP the
Well,
token.
I think for the past year in Cosmos, we've seen liquidity drying up and people are
Yeah,
like hesitant with incentives, right? Sorry, because we stopped. So
yeah, yeah.
ten
So,
percent went to
anyways,
the founders, yeah,
yeah,
and that was different. So that was you, that was Zaki, that was
yeah,
Alkia, right, and
yeah.
others. Yeah.
And like essentially like the occlusion component of the founders, like we don't have any,
Hmm.
we make plenty of revenue from our other lines of business, so
Hmm.
we don't really need to. Um, then what we did is then there were a set of sales of the foundation from the foundation, which was a total of $30 million was raised over 2 years. So
Yeah, I
we
saw the information about 23, but like
yeah,
it went to like 30, right, and
yeah,
led
it's
by
a lot more,
Polychain.
yeah, where we sold tokens to Polychain. So that, and most those tokens basically are liquid, are mostly liquid and distributed. Like those tokens will finish being distributed in October. Um,
And how many was sold to investors?
let's see, let's say about 100 million.
Right, they're under the water.
Yeah, almost everyone is underwater.
Yeah,
Uh,
so like just saying to like I just want to say, because for smaller buyers like me, sometimes you can actually get the better, like I cannot maybe say it because like it's bad to, like I don't have papers to give financial advices, but because of token as illiquid, the guy who always spent little on the some tokens will get better deal than the large guy who will try to acquire big number, because
yeah,
it will have to
yeah,
be OTC or
yeah.
move the price.
And
Yeah.
like basically that's what the foundation is there to do right now, right?
So,
Is
150 millions were like was
yeah.
founders, investors. There is over 200 million. I assume that was from the rewards, right? So it's getting
No,
this.
but that's also, people who joined the team later.
Mhm.
Um, there have been some grants from the community pool. There have been rewards for various
Mhm.
things. So, this is and so there's just this general, the strategy, the expectation with Psalm was that we would be like in a much more liquid environment than we currently are.
Yeah.
But you know, nevertheless, like our strategy has been, um, so there are a bunch of tokens that are released to people. Most people are staking them.
Mhm.
Um, and so that's usually the sort of core goal or objective.
So the nearly 300 million, is it still in community pool? Like, is it community
150 million. There's 150.
150 million and rest is because there is like I
There's
saw.
a bunch that's still in the foundation, right? And so
Okay. and and this foundation tokens is to, like, they are still reserved maybe to do the future sales
future
or.
sales, incentives, that kind of stuff.
Mhm.
We typically do sales with lockups, um, you know, and it's basically just the continued, research and development, supporting onboarding new strategists with grants, writing new DeFi protocol integrations, that
Mhm.
kind of stuff. And then
Yeah,
marketing, working with exchanges on listings, that kind of stuff.
yeah. I think that this because there was like many people complain about tokenomics, but yeah, it's pretty simple. I think everyone was you could hear the voices that the founders got like 30% or something. That wasn't that, I believe, was foundation, not the founders,
Yep.
which is two different things. But yeah, like I was mainly interested about like the price for investors, because I saw you raised so much money.
Yep.
The market cap was below what you raised, so I was thinking
Yep.
like, seems tempting, right? Like we don't know because it's all speculative market. Um, but I saw some of the
I
wallets.
basically
Mhm,
view like, okay, so like how is SOM really supposed to work, right? The way SOM is supposed to work is SOM is supposed to appeal to people way outside of Cosmos.
mhm,
Like best yield on ETH. There are way more people who hold ETH
mhm,
than hold Atom, hold Osmo, etc. Right? So SOM is supposed to, and we have products coming out for things like Link and Maker and Aave um, uh, uh, and all of those, all of these tokens, right?
mhm.
We are really aiming at like sort of largest, the largest DeFi apps, the largest token holder communities. That's who SOM is building products for.
Mhm.
And the expectation is that like, you know, if and or when one of these products really catches on with one of those communities, some fraction of them will be like, "Oh, I like what this SOM technology is doing for for my link yields, for my ETH yields, for my stablecoin yields. I'll also own some stable. I'd also like to own some SOM." And then you get
Mhm.
like a positive feedback loop
Mhm.
with liquidity. It's not just supposed to be like, oh, like you know, again, people in Cosmos are like sort of used to these like this sort of tokenomics that exists as like kind of like an isolated perpetual motion machine that is like trying to move forward. And SOM is not a perpetual motion machine. SOM is is like a useful service for token holders of on many communities outside of Cosmos. And if those holders believe in the utility of SOM to their existing tokens, again, you know, you don't have to believe in the SOM token to use real yield ETH. It's the highest ETH denominated yield out there. You don't
Mhm.
have to believe in the SOM token to get stablecoin yields from USD from real yield USD. It's the highest
Yeah,
stablecoin denominated.
this why what this why it was interesting to me. That this is why I like liquid staking products like Stride, because it's simple. It doesn't You don't rely on the performance of the token, but like on the product itself. So the Stride succeed if there is a lot of ST Atom and other assets. The some succeed if a lot of people deposit the
Yep.
stable coin to earn yield. The yield on stablecoin is over 5%. With incentives, I think it's 7. So,
Yep.
sorry, do you know like how much people depositors in US can earn right now on the US dollars or on the treasuries? Just thinking if
It's
it's
like 4.7%,
so
right?
so you still can outdo them, like.
Yeah, but it's I will be very like straightforward. Like, in the current interest rate environment, real yield USD is not super compelling.
Yeah,
But
yeah, obviously.
it's good if you're keeping dry powder on chain as an investor.
Hmm.
Um, but like, from a for the point of view of a of a anyone who has access to hold treasuries or whatever, like it doesn't make any sense.
Yeah, like obviously, and it's probably safer. I know there's a lot of hate to financial system by the people, but it's just like way better opportunity. Like I was even checking year in finance, and there was like yield is like 2% to 3%. It's not really compelling for the current interest rates, right? um Many people wonder if some will integrate Cosmos. And what I thought by that, like the strategies would have to be probably Umi, right? Because that's lending, borrowing. I know Mars is doing something. Uh,
Yeah,
does
I mean, like the honest answer is like, okay, so like Quasar and Vallejo are fucking fantastic people,
Mhm.
like straight up. Um, I think Quasar, in some ways, it's like, it's our cousin in Cosmos because they are sort of trying to build something more like Sommelier for Cosmos.
Mhm.
Um, Like the honest answer to my mind is that like the infrastructure that we built for Sommelier is so sophisticated, right? Like we like the real yield USD uh Uni V3 quoting is like top 5 in like a super competitive pool. Um like our infrastructure is like really designed to like be very state of the art and to
Hmm.
capture these like opportunities, and there just aren't opportunities like that in Cosmos to like earn like outside like like market beating yields from real economic activity.
Hmm.
um and like the like the caps on like Mars, are like $1 million, right? Um, like I don't know, like I've been playing around with these things, like my just from like leveraging atoms and stuff like that, like my presence in these pools, like I'm not a whale on ETH, I'm a whale in Cosmos,
Hmm.
right? It's just a smaller pool. Um, Cosmos DeFi is smaller now. Am I bullish on Cosmos DeFi in the 2 to 3 year time frame? Absolutely. I've made this, I made this tweet that was very popular that like Cosmos has 12 months to kind of
Hmm.
build some sort of enduring advantage. Otherwise, like essentially like the the versions of Cosmos that are built on Ethereum that are sort of gaining momentum even though in many ways they're inferior to everything in Cosmos, will like outperform, right?
Yeah.
But there is, we have, Barachain, DYDX, Nobles, Celestia, all of these things launching in the next 12 months, really in the next 3 or 4 months. All of these things have a tremendous amount of potential to sort of change the game for
Hmm.
Cosmos. And to like there's another like very interesting and sort of subtle thing, which is Ethereum DeFi is really built around atomicity, right?
Hmm.
So like atomically moving all of your financial positions, trading, etc. And sommelier strategies are built around that idea, right? You're able to atomically enter and exit the strategy in a transaction. That's the user experience that people are used to. That's what people want. If you want to build anything that is an asset manager that is natively multi-chain, i.e., holds positions on multiple chains in the same strategy, you have to move to a model where the process is async. So, like, you put your money in and you wait and you get your LP shares. You
Hmm.
put your LP shares in, you wait, you get your money. Um, and Stride works like that today. Quasar works like that today. Like, it's not saying that these things are impossible, but are you going to get you know a fund with tens, hundreds of millions of dollars of assets under management to do that? I think the answer is no right
Hmm.
now, right? Right. This is the advantage of targeting ETH DeFi, is that, and like targeting that atomic user experience, because right now there's a larger market for it.
Yeah. This is good point because I think I get a lot of shade because I always say there is nothing to do in Cosmos, and I mainly come from Cosmos, so like I'm very familiar with um with the chains that exist here, right? We do have like osmosis, so people can swap the tokens, they can speculate on the tokens. We have Stargaze NFT platform, but when you go to Ethereum, despite the very high gas fees and despite the superiority of Cosmos tech stack, there's so much more to do on Ethereum.
Yeah.
Like you have massive infrastructure of DeFi, and I don't want to shit on Ethereum, but it, it almost appears like being 2 years ahead, right? Like the Ethereum is really like I wonder why is that? Is it because I think there is two things. You can be like someone can be very good developer, but someone also has to like invent things, right? So the year in finance happened because someone had the idea, hey, like this is great product. He maybe wasn't even good dev, but he had the idea.
Andre is a Andre is a good dev. Bontug
Mhm.
is a great dev. I don't want to. Bontug is like the urine like the urine team and Bontug in particular are like
Yeah,
you know,
I like reading Andre thoughts. I know there was some controversy. I don't come like from Phantom, right? But
yeah. I mean, but like I mean, Andre left urine like 2 years ago,
he
basically,
came
right?
he
It's
went he
almost
came back a few months ago, I think.
no. I don't think he's still at all
Is it?
meaningfully involved in urine.
All right.
Yeah,
But it was like interesting reading the his blog, how he tried to manage the Phantom Treasury because they were like essentially broke,
yep,
and he had to do the certain like hard decisions
yeah,
that
yeah,
maybe
yeah,
not everyone liked, but he ensured that Phantom has, I think, over $100 million in stablecoin nows, right? Like
yep.
so, uh, uh, I like this type of leadership that is there. And you know, like so, yeah, he had the idea for year in finance, and it seems in Cosmos we lack of these ideas, right?
Um. Okay, so I'll tell you a couple of things that are like
Hmm.
downsides of Cosmos in its current form right now. A lot of what happens on Ethereum is copy pasted code with sort of uh, Ponzonomic token incentives built on top of it, right?
Hmm.
Um, now, on one hand, it's like, oh, there's like actually like for all of the hype and all of the noise, there's like sometimes like not that much real innovation, right?
Hmm.
Like, you look at most projects and it's like, oh, we copy pasted this from this project and this project we stuck a token on top and now, you know. But the thing is that like one, the devs make money from this.
Hmm.
Um, right? Like, it creates a lot of opportunities for the devs to make money for, not having to spend multiple years in research and development mode. Whereas like like basically every Cosmos chain that is noteworthy is like a multi-year R&D lift.
Hmm.
Um, right? Like there's an enormous amount of R&D that goes into every Cosmos chain. And on one hand, that attracts a very ambitious set of builders, um, which is, I think, a really good thing about the Cosmos ecosystem. But what you don't have is this like continuous churn of like copy paste projects,
Hmm.
right? Which is sort of interesting, right? It's like, you know, Evmos, but we only had one major. We've had two copy pastes of Evmos so far, like basically like Kava's EVM and Canto.
Yeah.
Um, right? Like doing the Ethereum copy paste thing essentially, but like using a blockchain stack. Um, and the um, but and like all of those have done kind of okay, but like nothing huge. Um, in many ways, and so this mechanism of and there's no for instance, on an EVM chain on Cosmos, you should be able to do everything you could do on, like everything that's available on Arbitrum, everything that's
Hmm.
available on everything that's available on Arbitrum, everything that's available on Ethereum mainnet, etc., should be portable to Cosmos. But you know, and a lot of people were expecting that to happen with Evmos,
Hmm.
and for they made a bunch of missteps along the way, like between the initial chain halts and
Hmm.
the Nomad hack. It really burned a lot of the people who were like, frankly, like a lot of the people I know who were like kind of like plotting to like bring the Ethereum DeFi stack to Evmos, like lost millions of dollars and like kind of you
Hmm.
know sent their attention to Arbitrum or set their attention to optimism or anything else. They're like, There there were greener pastures, and they went there. Um, and the Evmos team is in this like very challenging place of restarting that. But then we also have like the Barachain effort, which is not a fork, but like a complete rebuild. And then you have, potentially launching like lots of EVM type stuff on top of Celestia. So, you got to be realistic about where we are, the
Hmm.
setback, the challenges, the lack of liquidity, how badly the collapse of the Terra ecos, the collapse of Terra, the collapse of Nomad, like all of these things hurt Cosmos a lot. Um, but also, like, you got to be like the real truth of the situation is like there are a bunch of multi-year efforts that are culminating in the short run that have the ability to inject just enormous amount of energy and liquidity and attention
Hmm.
into the system.
Yeah. I think Kanto is shooting themselves in the foot now. I was a little bit excited about Kanto early on, but like I'm in the NFT space, and there's like one most popular NFT on Kanto by far. They are actually bridging to Ethereum, because what started happening for like past weeks or months, every few hours there is this snap of few $100,000 sale of Kanto.
Oh,
So they're
really?
like, we are leaving, and that's the problem of those many chains. It's like you can check the counter price, and it's like 100K dumps or more. I don't know who does that, but that's essentially a lot of this community driven chain that didn't raise any money. They like are like, oh yeah, we're selling, and incentivized with 250%, right? Like that's.
Yeah, I mean, this is like one challenge that I think people have to like, and like is a challenge that I, as a builder for Sommelier, is building Sommelier and building everything else, right?
Mhm,
Which is the truth of the matter is decentralization requires liquidity.
mhm,
Like ultimately, the way you get to decentralization is people trading the underlying token, right?
mhm,
Um, and in an illiquid environment, it becomes really hard to like actually decentralize anything.
mhm,
Um, and so, this is a challenge. Like the plan for Sommelier was, do a bunch of research and development, build the seller's contracts, show that this should work. Um, and then, really the intention was for the like, founders to step back and the strategists and the community to real and the like token holders to really drive things forward.
mhm.
But like we don't have the liquidity to do that. So instead you have the reality of the foundation is is doing OTC sales, is going out there, trying to get liquidity bootstrapped and get us, and grow adoption and get us to the next bull market.
Yeah.
Um,
You said
yeah,
about decentralization. Actually, Cosmos is. I think it's because it has somehow this very high issuance. I don't know how price is holding on, but the Cosmos is really heavily traded asset. Like, sorry,
yeah,
Atom,
Adam
and it's on so
specifically.
many centralized exchanges now that
Yeah. Who do you
this is
think
the
did
one
that?
thing that
Where
make
do you
me
think that
bullish.
came from?
Sorry.
Who do you think got Cosmos listed on all those centralized exchanges? Where do you it didn't wasn't magic. Someone went
Well,
out of
I
it.
would say maybe, yeah,
It's
many
mostly me.
maybe many people would accuse you for doing that, because somehow in Cosmos people don't like centralized exchanges, which I
Sure.
think is big mistake, because they are so important. Like the market making is important. You like,
Yeah.
so it's great thing, because Cosmos is investing every corner of the ecosystem, and if it's that large, it might have no utility and somehow trade okay, just
Yep.
because it's everywhere, and the market makers keep using that, right?
Yep.
So
I mean, like the reality of the situation is like, I mean, I don't have a full explanation for honestly what keeps the atom price going. Is it would be like my my biggest answer. Like I think the reality of it is Adam got into the market, worked really hard to build liquidity for the token.
mhm,
Um, it's still it's essentially it does carry very much the network chain meme essentially. Like it's a
Yeah.
meme coin, right? But it carries the meme of the Internet of Blockchains, which is a meme that a lot of people believe in and are excited about. Um, it has a lot of custodian support. Um, it has a lot of custodian support. It has a lot of exchange support. It has a lot of market maker support. And this um, enables the asset to be very liquid, trade. Paradigm exited what, like a $200 million position, barely moved the price.
Yeah, that was, yeah, it was crazy. Like, I don't know how especially with this issuance, right? Like, we
Yeah,
don't trade that much worse than Ethereum, but we have like massive issuance, which is yeah.
yeah. But the issuance will slow down. The issuance is coming down on a regular basis. I think, I think that there's because now that we're over the staking target, right? It's like it's dropping about
Mhm.
1% a month, um, and it right now it'll bottom at 7%. Um, uh, but there is, it's just a governance proposal away to lower it.
Yeah. So look, there is this idea that a lot of trading, a lot of activity will come to layer twos, right? On Ethereum, for example.
Yep.
So it will ease the traffic on Ethereum, hopefully lowering gas fees.
Yep.
But it's still, as the more layer two pops out, the value of Ethereum grows
Sure.
because it's security provider. This is the vision that you would have for Cosmos. Like that's exactly, like, you want as many chains to kind of start using the secure, because Ethereum will be that, like, because Ethereum is so unusable. Essentially, it will have the activity will have to move to
I
L2s,
mean,
right?
it's a sort of generally a fascinating thing, right? Like, you know, it's been interesting that the most successful new coins of this last few months have all been on like the lowest capacity blockchains.
Mhm.
So like, you know, Bitcoin and ETH L1 have been like, Pepe launched on
Mhm.
there. You've had all of the BRC20 tokens and ordinals on Bitcoin. Like, in many ways, we built all of this more scalable infrastructure, Arbitrum, but like ultimately the builders for these things chose the lowest capacity blockchains and have had success on these lowest capacity chains.
Which kind of show maybe gas is not most important. But I can't imagine that, because I'm also like stupid wasting like the gas. But like regarding gas, and I was accusing Sommelier of the lack of the optimization. I'm not sure.
Yeah,
Sorry,
yeah,
because
optimization.
I made deposit and it was $60,
Yeah,
the gas, and I was sending the NFT from wallet to wallet, or doing the swap the same around the same time. It
yeah,
was $5. So it was
yeah.
like, hey, this is like 50. Sorry, I need to pack that out. Hey, man, wanna go? No, I think she wants to go, but okay, later.
Or
Let
does
me.
she want to like? Does she have a question?
Sorry. No, because my brother-in-law came and she was looking at the door, so I was thinking. So I was accusing of lack of optimization, but you said it's not this, because I know, for example, when some contracts are really badly optimized on Ethereum,
No.
the gas fees
So
shoot up. Yeah.
what it is so like, when you're depositing into Sommelier, you're depositing into an Aave lending position or a Uni
Hmm.
V3 trading position, right? You're depositing into like an active, complex smart contract position.
Hmm.
And so the all of the things that we built into the system to protect users, okay, from strategists, it costs gas, right? Is like the honest answer, right?
Yeah.
So the argument though is you put your funds into Sommelier and you like never have to touch them again, right? Like because the chain, the strategy pays the gas fees on all of the rebalances, etc. Right?
Yeah,
Um,
that's what I was thinking because there is a lot of rebalancing. So I imagine that's a lot of gas, right? As
so
well.
the other piece though that is exciting is we do have a bunch of new strategies that are going to launch next Wednesday, so May 31st. Um, and there's something clever that we're able to do with those strategies, which is we can actually essentially not so sommelier strategies are very cheap to enter if they aren't holding any active positions. It's the active positions that they hold. Because if you think about it, right, every time you deposit in sommelier, we have to figure out the value of the Uni V3 positions, the Ave positions, all of this stuff. We have to compute all of those values, and then we have to give you your LP shares,
Hmm.
right? And that costs a lot of gas. But if the position is very simple, if we're not holding these complex positions, then it's very cheap to deposit into a sommelier share.
Hmm.
So we are going to launch these strategies next week, and our plan is potentially every weekend to exit the position to make it very cheap for people to deposit and withdraw, and
Hmm.
then re-enter the position during the week.
Okay.
Um,
But also it's okay because for example I can bridge my Ethereum to Arbitrum, right? So I think the bridge will cost me like $10, and
yeah.
that's
So
correct.
the one of the biggest opportunity, one of the okay. So I mean, this is the stuff that's really challenging about in general blockchain. So we integrated Rhino Finance, which is an
Hmm.
L2 yield aggregator solution. So you can actually, for very low gas prices, use Rhino. You can get to Rhino from Polygon, Arbitrum, Optimism.
Hmm.
So you could bridge into Rhino from them. So if your ETH is already on a centralized exchange that supports Optimism, Arbitrum, Polygon, you can bridge into them and then bridge into Rhino from there,
Hmm.
right? That's the lowest gas price way into real yield ETH.
Hmm.
Is to go exchange like Polygon, Rhino, real yield ETH. But that's
Hmm.
like, I mean, it's an real,
Yeah, I,
it's
I
not a
probably will
user
try
friendly
to
workflow.
I probably will try to do it on the because I was recording video which like had like misinformation because didn't fully understand, and I entered with like $1,000, so I paid $60 just to record video,
Yeah,
and to exit later the gas was like 250.
yeah.
So it wasn't very
Never
clever.
cool.
Like
Just like don't leave. It's great.
uh yeah, so I think it's best for people if there is like substantial amount like of Ethereum, probably upward of
Yeah,
10
for like
Ethereum. Yeah.
anything under $10,000, like the
Yeah, so
actual
like
answer
five.
is to use Rhino. Like,
Yeah, yeah. I was thinking like this. I know Interchain Foundation holds a lot of Ethereum. Like they should probably do some use considering the high cash burnout that is usually coming from Ethereum inflation, right? They could use the Ethereum to earn some yield,
yeah,
so they could actually fund the operation with that.
but that is a great example of a whale, which is there are many whales out there that are just not equipped to operate on chain in a significant way.
Mhm. Yeah, like that would be substantial amount of money they can generate and fund something. So that's the examples of the great customers that could like really explode the total value locked right
Yeah,
quickly if the customers like this come. Okay, Zaki, I think that's enough. I think the a lot of sommelier stuff was covered.
this is a
Hopefully.
great video, man, and it was really good seeing you in Hong Kong. And I hope to see you again soon.
Yeah, I hope we meet each other again. Like we have more interaction now. You more often on this channel, and yeah, really enjoyed talking to you. Really enjoyed meeting you, and hopefully we're gonna chat soon again. So enjoy your day. Thank you.
Thanks.